Good day, everyone. Earl here. Review a couple of trades that I took late in New York session today. June 26, 2024, S&P Micro E-mini, S&P 500 Index Futures. What I have laid out here, scrunch this down a little bit. Let me go up to the 15-minute chart. Clarity here. There we go. That's better. The vertical lines that you see here, which represents midnight New York. Horizontal line here, it's the opening price, midnight New York. And we can see in the overnight session, price traded up, created a reversal, traded down. And then right here, when New York NYSE opens, 9:30 Eastern time, you can see price traded back up, created a new low. So now we have this range from this high to that low, equilibrium being right here. You see how price kind of just traded back and forth for middle to the later part of the session. And finally, right at the end of the day, we have this spike up to here, which coincides with this level right here. So it coincides right up into this. Yeah, this little pattern here is what I call an M1. I'll show you why. Actually, I don't call it that. I learned that from elsewhere, but I'm using it. M1 reversal pattern. Those of you that don't already know is when the second leg of the M is higher than the first one, the second point, and then it drops, trades through that middle point all the way down. And we can see, and what this did is this created kind of bearish price momentum. We saw how right at the end of the day, price traded right back up into that area and is now pulled down. And we're into electronic trading hours. So the trades I took today, I kind of fumbled my way around a little bit. I'll show you kind of the error of my ways. I got it wrong, and then I got it right and made back my money and put myself back in the green. 5-minute chart. So there's New York open. New York close. So what had happened is I came to the market right around in this mess right here. And my hours are different than most people. And so I tend to come to New York session very late, which is why I trade Asia session and the Forex market. But when it comes to New York, I like to trade the S&P Micro E-mini futures. It gives me a fighting chance. But as you can see, we have this bullish move to the upside left behind this bullish order block along with this fair value gap. And we can see how price traded back into this gap, into this bullish order block area right here, these two down candles. And price respected, the bodies of the candles respected 50% of that gap, which is right there. And so where I got it wrong is I thought price was coming down to take out this level. I went short. I got it wrong. I got stopped out, but then I flipped and went long and I got it right. And I took profit actually at this level here, a bit too early, but it was enough. And ultimately I thought to myself, well, price will probably clear these relative equal highs right there. And sure enough, for New York session, it created a high of the day right there by clearing out those relative equal highs. Go down to the 1 minute chart, give you a little bit more detail of the error of my ways. This will be a little bit more telling. Put on the executions here. You can see where I took. Actually, no, I was wrong. So what happened was I actually did go long right here. And let me highlight the exact level where executions labels. Okay. Spread this out a little bit. Yeah, so on this candle, I bought it 55.31.50, which is right about that level. My stop was at 55.27.75, which was a little too tight. Price traded through that gap. It respected the 50%. I tried again, went long here at 55.31, which is right there. But this time I widened my stop quite a ways. And as you can see, my goal was to get above this level right here, 55.37.75, and I exited at 55.38. So the error of my ways is my stop was too tight the first time. I widened my stop for a second attempt. I was in the red for a little bit, but then finally moved, and then right at exactly 10 minutes before market close, price just took off. So the algorithm executed buy program took out that double top right there, relative equal highs, cleared up that, and now here we are. So the general idea I had correct, and my thought process was, I had a pretty good feeling because of this run right here, this bullish, the market showing its hand, so to speak, trading. I just had this feeling that, we had this area, this kind of double top right here. I had a feeling that by the end of the day, price would clear it, and it did. Lesson there was I need to widen my stop a little bit, learned that lesson, applied it, made my money back, plus a little bit extra profit. Trading very small, just one contract, very small size. I have a very small $100 account that I'm playing around with, that I'm practicing with. The good thing about that, if I blow it, it's only $100. It's not going to break me, but this is a good way to practice in real time. I can practice paper trading, but also when you put real money into play, it kind of changes your emotions a little bit. So that's what I saw today. I got it right. Initially wrong, but then got it right. I hope this was helpful. Gives you a little insight into a little bit of my psychology. I'm learning not to panic, but I need to take better care and do. When I took that initial buy, I hadn't done a thorough analysis on precisely where I thought price would go. Did better the second time. There you have it. Hope this is helpful. I really appreciate your support. Thank you for watching, and I'll see you next time. Cheers.